Hi, and welcome again to another edition of Market Analysis for today, March 27th, 2024. I'm Giovanni Bencourt, analyst, trader, and educator with Vantage Markets. All right, so after the three major US indices ended the regular session lower yesterday, the focus remains on a crucial reading of the US Core Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge. The data is scheduled for release on Friday, when the U.S. markets will be closed in observance of the Good Friday holiday. Now, that's the number everyone's going to pay attention to, and whatever happens in the meantime is going to be noise. So I don't anticipate a whole lot happening until we get that data point. U.S. rate futures have priced in an 8.9% chance of a 25 basis point rate cut at the next FOMC meeting in May, and a 64.2% chance of a 25 basis point rate cut at the June meeting. Today, investors will likely focus on U.S. crude oil inventories data. Economists estimate this figure to be negative 0.700 million compared to last week's value of negative 1,952,000 barrels. So that means that if it's lower than last week's, then we can assume that because we're having a high demand and lower input, then we might next week see some movement to the upside in the energy area, obviously crude oil. So can we anticipate and speculate that next week we could probably see crude oil around 90? And I'm talking about WTI, okay, not Brent. So that could be one scenario for next week. Now, today, in the bond markets for today, the United States 10-year rates are at 4.24%, up plus 0.21%. The Euro Stock 50 futures are down negative 0.04% this morning, as investors digested the latest batch of regional economic data and looked ahead to Friday's release of the Fed's preferred inflation gauge. European Central Bank board member Piero Cipollone stated Wednesday that the ECB might be able to cut interest rates swiftly despite wage rebound. Asian stocks markets today settled mixed. China's Shanghai Composite Index closed down negative 1.26%, and Japan's Nikkei 225 stock index closed up 0.90%. Japan's Nikkei 225 stock index closing higher today. The real stocks led the gains on Wednesday after a government survey revealed the country's land prices surged at the swiftest rate in 33 years in 2023. Export-oriented stocks also advanced as the yen briefly hit its lowest level against the dollar since 1990 after the Bank of Japan board member Naoki Tamura said financial conditions will stay accommodative. So by that being said, let's take a look at what we can obviously see in the markets today. So let's take a look at the NASDAQ. In the NASDAQ, we could probably see obviously that we are trading in yesterday's range. We are creating a channel of 18,600 and around 18,400. So as the momentum, which is not much, being created in the London session as when the US session opens, I could probably see this obviously fluctuating to the upside and not much, right? And a retracement or a pullback towards the moving average can also be anticipated because, like I said, we are in this tight range. Okay, so that's for the NASDAQ. Let me get over here the S&P 500, which also the same token applies. So we are basically in a tight range. Okay, very close to our resistance. The RSI is borderline, almost getting into being overbought, so keep that in mind. Then we have the Dow. If the Dow does happen to do more of a move to the upside, we have 40,000 as our psychological resistance points, psychological. Okay, and then we have crude oil, as I spoke just now. Seeing that the number, we could probably see some pullback towards the 81 session, then just find more another leg up. $82 could be that psychological resistance point for crude oil. Then we have Nat Gas. Nat Gas, it has been obviously on a downtrend. Let's see if we meet our support, which was created by this double bottom. Okay, will we continue? Will we break it? If we happen to violate it, meaning depending on the time frame that you are, if the market happens to trade below it, but quickly retreat and close above it, that could be a signal that the market has found the support and might reverse direction. However, if in the same time period that candle happens to close outside of it, below it, that's breaking that support. So we could probably anticipate at least 160, or at least going back to meet this low that was created around the 19th. So that's the scenario for Nat Gas. Nat Gas has picked up a lot of demand, and especially obviously from the United States. So let's see what will happen from here. Gold, I was saying that it was in a tight range between 2180 and 2160. We have fluctuated above it. Okay, above it. Here's 2180. We fluctuated above it, obviously. Right now, we above it. Yesterday we didn't close above it, so that resistance, that psychological resistance, has been violated. Let's see today if the market continues to with this momentum to the upside. The RSI is almost entering to be overbought, so 2200 can be again that particular movement. Now revisiting that high of that peak of 2220 today, to be reached today. It's far-fetched, but it can happen. Okay, it can happen. Remember also, there's low volume this week because of the holiday, so that's another reason. Also, silver has been on a tear to the downside, but not as much as gold. So I do anticipate silver to at least come back and meet come around 225 and kiss it somewhere around there. So to the upside. Copper. Now, copper has, after making this nice movement to the upside, copper, let's take a look at using the Fibonacci tool, the retracement tool. So let's analyze this movement, and let's take it from where we began, which is right here, all the way to the top, right here to this top, right? Let's somewhere around here. Let's make sure we have all of the market. All right, so in an analysis, technical analysis, the Fibonacci retracement tool is based on the golden number, which is 0.618, which is the Fibonacci number. It says that as the market is moved to the upside, a correction can be anticipated, obviously, and we can use the area, the zone of the Fibonacci golden ratio to be the area where we will find support. So therefore, markets could probably come and rebound around this area. Now, there's nothing written in stone. The market just going to continue just trending lower, okay, since we are seeing that so far. But if it does, would it be to 390 being a round number? That could also be one of those scenarios. Okay, so keep that in mind. But for now, going with the trend, so selling copper. Then we have Bitcoin. So Bitcoin also is here in $72 and that 70 value. So let's see what will happen. Would it just trend to the upside? Will it fall back below, so at least towards what? Towards our moving average. Then we have the currencies. So again, also the euro, perhaps looking to see if we find support around this double bottom, 108 and change, round psychological number. That's for the euro. Then we have the pound, same token, 126. And those things will happen if we happen to, if the dollar happens to appreciate and trade above that 104 to 100 ish level. So we have here, we are also creating an ascending triangle, and the direction of where the top, where the market is closer to the top, so we can anticipate a breakout to the upside. If that happens, then we are gonna be seeing those support levels for the currencies and metals perhaps being met. So that's it for me today. Have a great day, and I will see you tomorrow.